Gasparino has as well, and he's here to tell us the details. Hey, Charlie.
Well, the pricing, I think, begins today, David. After the bell, I think you'll get the price of it. A lot of people are talking something like $35 a share, and then it opens the trade tomorrow, and we'll see what happens. And I will tell you this, I can't get a really good handle. I know this sounds like I didn't do my job, but I did today. I went out and spoke with a lot of hedge fund traders that trade this stuff, a lot of analysts and people that are part of the underwriting team who are not allowed to speak publicly because they're still in a quiet period. But, nobody knows where this thing could come out. It could bounce to 70 from 35 or go down to 30. I mean, here are some of the sort of conflicting trends. 30% of these shares will be designated for retail. That means the Robinhood investor, which has grown dramatically over the last year or so. I mean, their user growth has exploded. You would think that would be a net positive for the stock. This could be like a cult stock that they want to hold on to. But then again, you hear from retail, from the institutional side, that they're worried about Robinhood's business model, heavily reliant on things that could change, and hurt its revenues over the next year. One of those things is something known as payment for order flow. Robinhood does not match its buyers and sellers of trading. It sells them to third-party brokers. They get 70% of their revenues from that. We do know that the SEC is looking to regulate that business, and they could regulate it away. That's one thing. The other thing is, David, interest rates. If interest rates do rise unexpectedly, Jerome Powell says not until 2023. Well, guess what? I had dinner with a CEO the other day of a major Wall Street firm that thinks that inflation is far from transient. He's going to raise it earlier. That's going to hurt Robinhood because it's going to take some wind out of these stocks that get traded. So it's all over the place. Robinhood is telling people it's changing its business model. It may be a market maker where it matches its own order flow internally. That would be interesting. They're telling institutional investors that. They have other tricks up their sleeve, maybe more stock lending, okay? So if you want to short a stock, they will lend it to you. But, there's issues with this business model, and it could go either way. And here's something else. Suppose the thing does pop to 70. What makes you think the retail investor is not going to sell out at 70 if they bought it at 35? And by the way, there's a sort of weak lockup rule here. They say, well, we won't give you another hot IPO if you don't hold on for 30 days. Well, if I'm going to make that much money, I'm going to say, screw you. I'm just going to sell my stock if it hits 70, right? I mean, isn't that what this is all about?
Yeah. Charlie, why do you do this business when you could be making billions on these trades? I don't understand.
Here's the thing. For everybody that makes billions on these trades, there are a lot more that don't.
Yeah.
Okay.
That's right.
Trust me on
this.
That's
right.
And I know I'm kind of good at this. Remember, notice how I said kind of good.
You have to be better than kinda to be a billionaire anyway. Charlie, great to see you. Thank you very much.